Hi, my name is Brian Kearns. I'm the owner of Haddon Road Advisors, investment manager and financial planning firm. And I want to show to you a financial plan in 10 minutes. We're not going to make a plan. I'm going to show you the basics, the fundamentals that I feel will help you make better decisions going forward for decades into the future. So let's get started. In front of you is a dollar. What are your thoughts when you see that? Well, it's how I live my life. It's what I use every day. What if I showed you $1,000? What do you think? What would you do? Spend it, save it, a combination of the two? How would you allocate it? Let's make it interesting. You'll never see a $100,000 bill. They're not in circulation. But what if you received a $100,000 windfall? How would you allocate it? What would you want to do with it? How would your partner want to allocate it? What would you be able to come to an agreement between the two of you on what you want to do with this money? If you received this 10 years ago, what would have been the best decision that you could have made that could have benefited you, benefited your family, maybe benefited your community, or would have taken care of any future needs that would have arisen in the last 10 years? This is the fundamentals of financial planning. Whether you have $10,000 or $10 million, it all comes down to these basic fundamentals that I'm about to show you. I call it the planning grid. Okay, welcome to the planning grid. I use this every time I talk to a client or a prospective client. I write it down on a piece of paper and I just take notes. Really quick. MCI, money coming in. MGO, money going out. It's like your checkbook. This flows. Money flows into and out of your accounts. If you net this together, it's called net cash flow. If it's positive, happy day. If it's negative, we got some things to think about. If it's positive, it becomes something that you own. Now, when I say something that you own, it's not just dollars. You can own. It's about things that you value or things that create value for you, things that can create income for you, things can generate income for your family, for future generations, maybe in terms of a legacy, or for future generations in terms of your community if you want to get involved in charitable planning. So there's a whole lot of things that go on in the own sector. Oh, debt. I call debt an obligation against your future income. What do I want? What do I mean by that? We'll touch base on it later. But these two things, what you own and what you owe, they fluctuate in value over time. And if you net them together, they become your net worth. Here's the secret. If this number is positive, happy day, it becomes an asset. If this number is negative, to make up for this shortfall of your net cash flow, you have to either sell something you own or borrow money. And that's when you have some serious planning issues to consider. So next, we'll go through the basic types of income. Okay, different types of income. This is a W-2. If you're an employee, your employer issues you a W-2, and they make your life a lot easier because they will withhold income tax. So they pay the IRS for you. Typically, if you're an employee, planning is easier, your income is more predictable, and you don't have cash flow issues relating to taxes. Now, 1099. This means you are being paid income by somebody who you are not employed by. So the company you did work for pays company money to you or your company, but they don't withhold taxes. So your income will be a lot more variable, and you will also have to plan for the cash flows for paying the IRS. If you are a partner in a business, you will get something called a K-1. Now, there's a whole lot of boxes here, and there's a whole lot of different planning issues involved with K-1s. Also, you will get a K-1 if you are the beneficiary of a trust. So K-1 income, there's a whole lot of things that you want to work on. There's a whole lot of planning issues. Now, where does this all flow to? It flows down to everybody's favorite thing, the 1040. At the end of the year, you report your income to the IRS. Really quick, this is what I want you to do. Go to line 15 of your last 1040. Write the number down. That's your taxable income. That's what you pay tax on. Go to line 24. That's your total tax. Note that number. Divide total tax by taxable income, and you get your specific effective tax rate, not your tax bracket, your tax rate. So say that rate is 20%. Well, effectively, you keep 80%. Those are things to keep in mind, actually, whatever your rate is, as you're going along and making financial decisions. Now, next, what are the things you can do with that income? There's only 5 things you could do with income. Okay, really quick, we went through the different types of income, some of the different types of income that you will see, and it is part of your money coming in. So next, what are the 5 things you could do with income? Okay, pay tax, live your life, save and invest, or defer paying income. And number 5 is pay down debt. Okay, we'll go through these quick. Paying taxes, it's life's greatest expense. You will pay taxes for the rest of your life. The question is, when are you paying them? How are you paying them? And why? And what structures are you paying taxes? Are you involved in a partnership? Or are you an employee? These all matter in terms of planning your net cash flow out into the future. Living your life. What do I mean? You go out and food, clothing, shelter, and enjoying your life. What are the combinations of things that you use your after-tax money to pay for these things? And how much should you spend now? How much will your lifestyle cost in the future? Do we have healthcare issues going, and so on and so forth? All kinds of issues involved in lifestyle planning. Number 3, saving and investing. This is your future this is your future lifestyle. Why? Because these savings and investing will be the thing that generates income in the future when you are retired. The key to this is understanding the compounding of investment returns. Einstein was asked, what is the greatest human invention? And he said, compound interest. Over time, money grows. It's as simple as that. The question is, what sort of risk do you want to take? I have clients that say, oh, I want to take more risk. I'm like, no, you want to make more return with the same risk, or take less risk and generate the same return. I like to look at it as a combination of danger and opportunity. Risk is a combination of danger and opportunity. A good advisor, investment advisor, will know that different opportunities have different dangers involved in them. And a good investment advisor will find the best opportunity given the danger that you're willing to undertake. Next, deferring income. Now, what do I mean? Well, you are coming to an agreement with the IRS that you will take advantage of certain structures out there, be it an IRA, a 401k, a pension, an annuity, a health savings account, and you say to the IRS, I will pay you taxes in the future. When? Welcome to planning. How's it going to work? How is your retirement going to work? Also, if you get to a level of high net worth, currently about $12 million for an individual, $24 million for a couple, and you will come to what they call estate taxes. There's a lot of issues involved there. In 2026, those thresholds will go down by half. So there's a whole lot of things going on in this space. What do you want to do for the next generation? Be it within your own family, that's legacy planning, or be it in the community, that's charitable planning. Next, paying down debt. It's the other way that you can increase net worth. Simple as that. I want to touch base really quickly on good debt versus not good debt. Okay, debt is an obligation against future income. What do I mean by that? Okay, there's good debt and there's not good debt. Say your tax rate is 20%. Remember, we looked at your effective tax rate, and you spend $2,000 on a credit card. It's a fair amount of money with a 20% credit card rate. The interest rate, they're out there, 20% interest rate on a credit card, and you pay it back in 1 year. You would roughly have to earn pre-tax $3,000 to pay off that credit card. Now, $3,000, it's a fairly substantial amount of money. But if you spent that money on a course that develops your skills and gets you a $5,000 raise, that's a win. If you spend it on a platinum pass for Lollapalooza, you had a great weekend, but it's not really a win. You're going to have to earn $3,000 to cover that. So that's what I mean by debt is an obligation against future income. Next, what's it all about? Okay, in the end, what's this all about? Planning is a bunch of numbers, but there's an art and a science to it. And this is something I like to use when I talk about the art of financial planning. It's called Maslow's hierarchy of needs. He's a U.S. psychologist who came up with this structure of how we live our lives. I like to use it and refer to it as, lifestyle leading to meaning. How are we going to structure your cash flows so you can move up the pyramid from paying for food, clothing, and shelter to getting involved in your community, to building your self-esteem, to climbing up to the purple part of the pyramid, self-actualization. Big word. Sometimes I'm not quite sure what they mean by it, but in the end, what are the values that you have? How are you getting there? And at the end, when you look back, you could say, you know what, I made some good decisions, and I am up in the purple part. Next, we'll go through a quick grid. Finally, this is something I call the standard of care. I grew up in, my first home was in Haddam, Connecticut, in a nursing home. My parents bought a nursing home. My mom was a geriatrics nurse. And within the geriatrics profession, the nursing profession, they have what they call standards of care. This is how you provide a service. And when I talk to clients, I show them this is what I call the standard of care. It's a menu. There's a whole lot of things here. Some don't apply to certain people, some apply to other people. But what I use is to get people to look at it and think of things that they need to focus on that in the end will help them climb Maslow's pyramid to the purple part. Financial planning, investments, retirement, family and legal planning, asset protection, and business planning. Well, thank you for your patience, and I hope you've learned something. My name is Brian Kearns, Haddam Road Advisors. I'd love to get your feedback. Hope this was worth 10 minutes of your time. Well, a little over 10 minutes of your time, and hope to do more of these in the future. And thank you for watching. Cheers.